Now guys, I am going to discuss the agenda of this S&P 500 weekly technical analysis. First point of the agenda is the S&P 500 technical analysis on the weekly chart. There were 3 weekly bearish candles and now there is a weekly bullish candle. So how this weekly bullish candle is going to impact the movement of the market? And also guys, let me remind you, this bullish retrace does not mean that there is a change of trend. No, there is no change of trend. Okay, the trend, it was bullish, but now it has recently changed to bearish and the bearish trend is still in effect. Okay, this is a bullish retrace, in this the bearish trend. Okay, there are some conditions. I'm not denying that it cannot change the trend again. It can change the trend again, but there are some conditions, and for the trend to change, it will take approximately minimum 4 to 5 days. Means the entire next week. If the entire next week supports the bullish movement, or there comes back to back 5 green candles, 5 bullish candles, okay, from April 29th, which is Monday, to May 3rd, that will be Friday, 5 green candles. In that case, there will be a strong probability, or like 95% probability, that the trend will change from bearish to bullish, right? So I will discuss all of this in detail in this S&P 500 weekly technical analysis. Weekly chart means the big chart, okay, the big picture. Okay, second point of the agenda is the S&P 500 technical analysis on the daily chart. So daily chart is a short-term picture. Okay, short-term picture, as I mentioned, minimum 4 to 5 daily bullish candle, continuous bullish candle. There must not be any red candle. Okay, all green candle, all bullish candles in the next week. Then only this is possible. Otherwise, the trend will remain bearish, and this bullish retrace is in the bearish trend. Okay. So daily chart means a short-term picture. Okay, I will tell you that what we are expecting on Monday, Tuesday, etc. So just like last week, I mentioned that on Monday, okay, there is very high probability, and I'm 200% confident that there will be a heavy bullish retrace, not a normal bullish retrace. No, there will be a heavy bullish retrace around 2%. Okay, 2.1%, 2.2%, 1.9%, but it will be around 2% of bullish retrace. Okay, and then it will stop, then it will fall. Third and the last point of the agenda is the probable movement of the S&P 500 from April 29th, which is Monday, to May 3rd, that will be Friday. So probable movement means that I will tell you that what we are expecting on these Monday, Tuesday, Wednesday, etc. And in the second point of the agenda, okay, I will tell you technically, okay, whether it is saturated or not, what the moving averages are saying, and the probable movement. I will cover all other aspects. So guys, now I'm going to begin with this, the first point of the agenda, that is the S&P 500 technical analysis on the weekly chart. Now guys, I am going to discuss the first point of the agenda here. This is the weekly chart, W as in weekly chart. And in the first point, I will do the technical analysis of the S&P 500 on the weekly chart. Okay, so weekly chart means one candle represents 1 week, okay, not 1 hour or 1 day. So yes, so before I analyze the candle, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you are looking for these, the daily and the precise updates of the S&P 500 from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now the candle. If you notice, it's a bullish candle. Okay, number one, it's a bullish candle. Not just a bullish candle, it's a good bullish candle. It's a good bullish candle. Number two, the closing of the candle was above this, the moving average. Okay, and this is a strong moving average. So this means that the market wants to sustain and market wants to remain bullish for some more time. Okay, clearly. But the problem with this candle is that this candle has failed. Failed in what manner? This candle has failed to give a closing above the previous candle. Simple. Okay, this means that although there are good bullish sentiments, S&P 500 and the Wall Street, the stock market wants to remain bullish, wants to sustain, but there is still bearish pressure, or good bearish pressure, or heavy bearish pressure on the stock market. That is why we have seen that the S&P 500 failed to close above this, the previous candle. So this means that next week, okay, it will be very crucial. Okay, because if there comes no changes in the next week, or if there comes a red candle, then what this combination will say, this combination, okay, it's a sandwich combination, okay, this is a sandwich pattern. This means continuation of the bearish trend, not normal but heavy bearish trend. More and more red candles, more and more fall will be there. Anyways, I will discuss this more, okay, in the last point of the agenda. But now this is the condition that yes, okay, there is no doubt that there are bullish sentiments, okay, bullish everything, but these bullish sentiments are under bearish pressure. Okay, I repeat, these bullish sentiments are under bearish pressure. Okay, and so until and unless there comes a good bullish candle, okay, next week if there comes a good bullish candle which closes above all of the moving averages, okay, and also the closing of this the previous candle, in that case we can conclude, okay, that yes, the bullish sentiments are now these the bullish sentiments are countering the bearish sentiments, and there are chances that the stock market can resume its bullish trend. Okay, but for that to happen, the trend on the daily chart, okay, this trend must change from bearish to bullish. Okay, so as long as the trend is bearish, the bearish pressure will be there. You will see sudden fall, sudden and surprise fall, because eventually the stock market will correct and will align itself to the trend, right? Yes, so this was the candle, okay, on the weekly chart of the S&P 500. And now let's analyze the candle, okay, here on the Dow Jones chart, because actually this is the problem, okay, or this is the trend, the bearish trend, okay, this was seen in the Dow Jones, and it is actually, okay, it is the Dow Jones which is putting the pressure on the entire US stock market, including S&P 500 and the Nasdaq. And because of this, the S&P 500 and Nasdaq, they are suffering the most. And this suffering is nothing, as I mentioned earlier, this is just the tip of the iceberg. If this bearish movement continues, if the bearish trend continues, then Nasdaq is going to suffer heavily, extremely heavy. Okay, there is suffering in the Nasdaq, then S&P 500 will suffer, okay, and least it will be the Dow Jones. Anyways, so this is the candle. Yes, the candle, if you notice here, okay, this is the weekly chart of the Dow Jones. Okay, now the candle is a bullish candle, it is simply a bullish candle. Okay, and because of this, the bullish movement, heavy bullish movement, okay, in the top primes of the Dow Jones, including Microsoft, okay, the Dow Jones was able to give a short bullish candle. Otherwise it was supposed to form a red candle and then more and more fall, okay, without any doubt. Okay, but still the bearish trend is there. Now other than that, closing of this particular candle, if you notice, is below these the moving averages, and looks like these moving averages are going to give a crossover. Okay, this moving average is going to cross over this particular moving average. If that happens, in that case, okay, there won't be anything left, and the bearish trend, bearish movement, bearish everything will continue. Okay, yes, the bullish candle, this is strong, this is a small or a normal bullish candle. Okay, and also the kind of candle, okay, if you notice, this particular last weekly candle is similar to the previous candle. Okay, what is this? This is seen as a spindle. Okay, as a spindle. So spindle simply means a reversal. Okay, last week also I mentioned that a reversal will be there, 200%, a bullish retrace, bullish reversal short term, it will be there, confirmed. There is no doubt about that. Okay, because there was this particular condition, then the absolute saturation, multiple conditions were there. But now this candle has set, okay, a reversal. But if you notice, the same kind of candle has formed here, but it is not a technical bearish candle, then it also means the reversal. However, because it's a bullish candle, it's a small bullish candle, this means that even if there comes a reversal, this reversal is not expected to be heavy. Rather, we can anticipate the reversal up to 1.5%. okay, 1.5% here means around 1.7% or so in the S&P 500. okay, but the other part is that the Dow Jones can still try to move up. Okay, however, if you notice, this bullish candle in the S&P 500 is heavy, very heavy, whereas this bullish candle is very normal or very simple. This, okay, all of this, the combination simply indicates there are bullish sentiments in the entire US stock market, very, very clear, but these bullish sentiments are under bearish pressure. So I hope the picture is clear. Bullish sentiments are there, but under bearish pressure, and we have analyzed the chart of S&P 500 as well as Dow Jones. Okay, now let's talk about the technicals. Yes, the technicals, if you notice, in case of the S&P 500, okay, moving average is clear fan out, bullish, everything is bullish here. Okay, in this pane it is bullish. However, if you notice, MACD of the S&P 500 is bearish, clearly bearish. Okay, and this has happened after November. Okay, so last week I mentioned that it doesn't matter. Okay, and also it is 200% confirmed there will be a bullish reversal, bullish retrace, but there will be no change in the trend will not change. Why? Look into the MACD has changed after 5 or 6 months. Okay, and it is not going to change, okay, again very soon. Okay, so now MACD is clearly bearish. Stochastic RSI is also bearish, and also the stochastic RSI on the weekly chart has not hit the saturation, clearly means bearish pressure. So now we can clearly see that where the bearish pressure is coming from. Okay, I mentioned bullish sentiments but under bearish pressure. You can clearly see that the bearish pressure is coming from the MACD and the stochastic RSI of the S&P 500 itself. Other than that, the daily chart is also putting some bearish pressure. The daily chart of the Dow Jones is also putting heavy bearish pressure. So what does it mean in terms of the numbers and buying and selling? It simply means that as of now, the market is not in a condition wherein you can say that you can buy for the long term because the trend is bearish. Okay, either it should change, either the trend should change so that you can comfortably and confidently buy, okay, without any fear, or the trend should remain bearish, okay, and there must come a good bearish candle so that it can be confirmed that you can sell confidently without any fear. So yes, I was talking about the technicals. Technically everything is good. Okay, saturation is there in the bull side. Remember, saturation is still there in the bull side. Okay, it is not heavy saturation, but some saturation is there, otherwise it's okay. So now what we can say here on the weekly chart of the S&P 500 is that on the weekly chart the S&P 500 is 60% bearish. Now if you have subscribed to my YouTube channel for last many months or years, then you know that we always look into the Dow Jones to confirm if this is true or not. So when you look into the Dow Jones, the chart of the Dow Jones, okay, clearly bearish, okay, and it is more bearish as compared to the S&P 500, or I can clearly say that the Dow Jones is 75% bearish on the weekly chart. Okay, 75% to 80% bearish on the weekly chart, whereas S&P 500 is 60% bearish. This means that now there is more room there in the bearish side, and yes, clearly 100% bearish pressure is there on the stock market. Okay, but what will happen, whether it will move up or whether it will come down, etc., on the daily basis, I will keep you posted through the daily and the precise updates of the S&P 500 if you are my Patreon community member. And if you are not, then you can join my Patreon community. I've given the link in the description of the video and also in the comment section. Now guys, I have one more information to share with you, that this is my S&P 500 or stock market knowledge transfer program. And through this program, I teach everything about the technicals, the movement, prediction, support and resistance levels, okay, how to predict the movement even before it happens. And the motto of the program is to help you become self-reliant. And because I'm going to teach the movement, hacks, predictions, levels, trend, analysis, technicals, so this will not just be applicable to S&P 500, but also to any stock, any index, any currency, any commodity, any crypto, anything that is there in the stock market. This will be applicable to everything. Okay, these are logics, these are technicals, everything. Okay, and also this program is delivered one-on-one basis. Okay, only one-on-one basis. And this is my email address. Whenever you want to participate in the program, you can simply drop me an email. And this is the Google spreadsheet, and more details are there in the Google spreadsheet. And when you open the Google spreadsheet, then I mentioned everything that what I'm going to cover. Okay, from basics to advanced, and the technicals, the values, and guys, once again, I'm using modified technical indicators. My technical indicators are modified, okay, which is why if you use the same technical indicator, you might not get the same reading. So trading strategies, options, everything about options, okay, from beginning to the advanced levels, and the live option calculations, okay, option premium calculator, live calculations, okay, and the support and resistance levels, my support and resistance levels, okay, how to analyze the trend, how to deduce the trend, and how to predict even before the things happen. Then these are some important terms and conditions, okay, and these are the snapshots of the meetings. So guys, this is my email address. Whenever you want to participate, you can simply send me an email, and I've given the link to this program in the description of the video and also in the comment section. Now guys, I'm going to discuss the second point of the agenda of this S&P 500 weekly technical analysis. And here I will do the technical analysis of the S&P 500 on the daily chart. Okay, and this is the daily chart. Daily chart means one candle represents one day, not 1 hour or 1 week. One candle means one day. Okay, so before I analyze the candle, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you're looking for these the daily and the precise updates of the S&P 500 from Monday through Friday, then you can join my Patreon community. I've given the link in the description of the video and also in the comment section. Now let's analyze the candle. This is the last candle, okay, formed on Friday. The closing of the candle is not equal to the high of the candle, and also the closing of the candle is below the moving average. This means that there is no confirmation on a gap up open, okay, or a gap down open. Okay, this is not confirmed. Okay, and if you subscribe to my YouTube channel for last many months or so, then you know that generally, okay, I can predict the gap up of the or the gap down 100% certainty. But this week, okay, no, there is no confirmation. There may or may not be a gap up or the gap down. Okay, and if I analyze the last candle of the Dow Jones, okay, then again nothing. Okay, nothing is clear. Okay, here through this the candle, because this the candle here in the Dow Jones, okay, it is more bearish as compared to the candle which is there in this the S&P 500. Okay, now let's talk about the technicals. Let's see, okay, what the technicals are saying. And yes, there is a little change. Okay, so what is that change? The change is that here technically the S&P 500, if you notice, the movement is inside the Ichimoku cloud. Now one thing, okay, you need to understand and you can learn, even if you are a non-technical person, okay, whenever the movement of any index or any stock, okay, or anything is seen within the cloud, then this movement is not trusted. This movement cannot be trusted, and this movement is always seen as neutral, neither bullish nor bearish. Okay, although the trend will play its role, okay, eventually the market will correct itself. Okay, the S&P 500 or the Dow Jones, they will correct themselves and they will simply realign to the trend. Okay, but this particular movement inside the Ichimoku cloud, okay, it is never trusted, because here you are seeing that, okay, it moved up, came down, and again it moved up, and now you are thinking that it will keep on moving up. No, there is no guarantee. Why there is no guarantee? Because the movement is inside the Ichimoku cloud. Okay, and this is what, this is illusion. Okay, I say, so I simply consider the Ichimoku cloud inside, okay, this this area inside the cloud, okay, simply as an illusion. Okay, because there is no guarantee. Okay, until and unless there comes 2 consecutive closings above the Ichimoku cloud, there is no guarantee that it will be able to move up if the trend will change. That is why in the beginning of the video I have said that we need minimum 4 to 5 back-to-back green candles to confirm if the trend is changing. Okay, it might look bullish, but within 1 or 2 days we may see that a sudden or a heavy fall. Okay, and similarly, okay, here we also in the bearish side also we need 2 bearish candles. Okay, sorry, not 2 bearish candle, only one bearish candle, because all of the technical indicators, moving averages are bearish, so we need only 1 bearish candle in the bearish side. Okay, anyways, I'll discuss more of this in the last point of the agenda. Now yes, so technically what I will say that it is more into this the bearish side. Okay, moving averages, clear fan out, bearish, no doubt about that. MACD of the S&P 500, there was a heavy divergence in the MACD, but now MACD is correcting itself. Okay, there is no crossover in the signal and the MACD. Okay, see, what we know about the MACD is that MACD has these two lines, 1 and 2 lines. Okay, there are other aspects, but let me just keep it simple. Two lines, one is MACD, moving average convergence divergence, and the other is signal of the MACD, Okay, so now there is no crossover in the signal and the MACD. Okay, it is still bearish. As long as it remains bearish, it will or as long as it is bearish, it will trade bearish. Okay, stochastic RSI, yes, stochastic RSI is moving up clearly. Okay, so this means that MACD is bearish, stochastic RSI is bullish. They are opposing each other, and then the movement is inside the Ichimoku cloud. Clearly confusion, clearly illusion. There is no 100% certainty. Okay, that whether it is going to move into this side or this side, until and unless it gives either two closings above this, means in the bull side, or one closing below the, okay, this is the Ichimoku cloud, right? But yes, there is no doubt about the trend will remain bearish. Okay, there is no change in that, and this means that in case of the confusion, the S&P 500 or the market will align itself to the trend. Okay, so technically what we can say, or what we can see here, okay, on the daily chart of the S&P 500 is that 1 2 3 4 S&P 500 is it is 75%, not 75%, it is 80% bearish on the daily chart. Simple. Okay, what we have seen on the weekly chart of S&P 500, it was 60% bearish. Here it is 80% bearish. This means that overall S&P 500 is 75% bearish. But whether it is actually bearish or not, let's see. Okay, through the Dow Jones. Through the Dow Jones, what you can see here is there is no confusion in the Dow Jones. Okay, it came down, was trading below the Ichimoku cloud. Okay, no illusion, no confusion. Okay, it moved inside the cloud, illusion, confusion, then it came down. Okay, again it is out of illusion and confusion, clearly the bearish side. Okay, moving average is clear fan out, bearish, everything is bearish here. Then what's the problem? The problem is the MACD. This was not supposed to happen, or the MACD was trying to form a slip, a bearish slip, and I have informed my Patreon community members that see, this is happening, so we need to be very careful. And here you can see that in my final update yesterday to my Patreon community members, I mentioned that the closing of the Dow Jones above 38,120 means the MACD has turned bullish. But the problem is that on the same day, stochastic RSI has turned bearish. This means that there is no bullish combination, and this means that this change in MACD will not be able to make any significant impact unless stochastic RSI also turns bullish. And for that to happen, Dow Jones must give 1 to 2 daily consecutive closings, bullish closings, okay, on Monday and Tuesday, right? And exactly the same I have mentioned in my pre-market update and the subsequent updates. So as per my notes to my Patreon community members, okay, it was clear that it is changing, but it will not be able to make any significant change because the stochastic RSI has turned bearish. The actual problem would have been there in the market if the MACD is bullish and the stochastic RSI is also trade bullish, or it is also trading bullish. Why? Because again and again, hundreds of times, okay, I mentioned in my analysis that whenever the stochastic RSI and the MACD are aligned in a particular direction, okay, then that direction becomes the direction of the stock or an index or anything that is there in the stock market, but they must be there in the same direction. Okay, here you have seen it was trading bearish, okay, bearish, and also it was also trading bearish. Okay, then we have seen the market, the Dow Jones was coming down, everything was coming down, bearish pressure, then heavy divergence, it started to clear its divergence, and then some correction in the stochastic RSI, and then some correction in the stochastic RSI. Okay, it started to trade bullish, and then we have seen some bullish or some relief. Okay, so now this means that even though we have seen a change in the MACD, this change will not be fully realized until and unless the stochastic RSI also becomes bullish. What it means? This means that the Dow Jones on the and also you can clearly see the closing is below the moving averages. This means that the Dow Jones on the daily chart is 90% bearish, heavily bearish. And on the weekly chart, the Dow Jones was 75% bearish. This means that the Dow Jones is around 80% bearish overall. Okay, and what we are seeing here, that the S&P 500 is only 75% bearish. So overall, once again, Dow Jones is more bearish as compared to the S&P 500, Nasdaq. Okay, this is very much clear, right? And also, so what it means, what actually it means, that it is bearish and the S&P 500 is this much bearish. How it is going to make impact, or how it is going to influence the movement of the stock market? This is very simple. This simply means that there is bearish pressure, heavy bearish pressure. Any bullish movement is expected to be limited. Rather, there will be heavy chances of a fall. Even if there comes any news, whether this news is either neutral or negative or little positive, all of these conditions will force the S&P 500, Dow Jones, Nasdaq to come down, okay, or to give up, okay, and to trade like this. But whatever happens or whatever will happen, I will keep you posted through these daily and the precise updates of the S&P 500 from Monday through Friday if you are my Patreon community member. And if you have not yet joined my Patreon community, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. And guys, it is not just about the daily precise S&P 500 updates which I give to my Patreon community members from Monday through Friday. I also give these the stock market opportunities in the premium stocks of the US stock market, minimum 5 to 10 every week. So guys, whenever you want to join my Patreon community, I have given the link in the description of the video and also in the comment section. And when you follow that link, then you will see that this is my Patreon page and this is my Patreon profile. And here on my Patreon page, you will notice that there are these two tiers. This is daily S&P 500 updates for non-US and Canada residents. This is daily S&P 500 updates for US and Canada residents. So when you subscribe to either of these, then you will be getting the daily S&P 500 analysis, updates, movement every day from Monday through Friday. And also the stock market opportunities, minimum 5 to 10 every week in the premium stocks of the US stock market. And guys, if you notice, many people have joined my Patreon community and they are getting these daily and the precise updates from Monday through Friday, each and everything. And they know what is expected to happen, what is going to happen in the stock market, what will be the conditions for the bullish and bearish movement. And guys, if you also want to get these the daily and the precise updates of the S&P 500 from Monday through Friday, just like these members who are getting these the daily and the precise updates from Monday through Friday for many months or years. So guys, whenever you want to join my Patreon community, I have given the link in the description of the video and also in the comment section, and you are welcome. Now guys, I'm going to discuss the third and the last point of the agenda of this S&P 500 weekly technical analysis. And here in this, the last point of the agenda, I will give you the probable movement of the S&P 500 for the coming week. Okay, means from April 29th, which is Monday, to May 3rd, that will be Friday. Whatever is going to happen here from Monday through Friday. Okay, so I will discuss here now. So point number one. So guys, before I begin, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. And also, if you have liked this video, then hit like. And if you're looking for these daily and the precise updates, precise analysis, movement of the S&P 500 from Monday through Friday, then you can join my Patreon community. I've given the link in the description of the video and also in the comment section. So guys, now the point number one, okay, or the most important point here is the FOMC is scheduled for May 1st, okay, Wednesday. This is the most important thing that is going to happen in the next week. Okay, there are 99% chances that Feds are not going to raise the rates, and also 99% chances that Feds are not going to cut the rates. Means there will be another pause. However, the Wall Street will still try to get something from the Fed, something positive, okay, maybe some commitment that there will be a rate cut, because now the stock market is realizing that Feds are not going to give any kind of relief in this entire year. Although the Fed chairman himself has said there might come some relief in the month of June, but the recent data, the PCE core PCE data recently, okay, on Friday, okay, has confirmed that the inflation is still holding and the economy is heading to stagflation. And last time the stagflation was there, it was 1970 71 1972, okay, almost 50 years. The stock market has only 2 days, Monday and Tuesday, if the stock market want to give any kind of bullish movement. And then on Wednesday, the FOMC, the press conference of the Federal Reserve chairman, will confirm whether the stock market has reasons to move up or it is simply going to come down. Now, as usual, Apple, okay, AAPL is the ticker, okay. Now Apple is going to post its earnings on 2nd of May, that is Thursday, okay. And it happens like this always that just after one day, okay, or the next day of the press conference of the Federal Reserve chairman, Apple will post its earnings, okay. And it is scheduled and everything is planned in this manner. And generally Apple helps, okay. If the Federal Reserve chairman goes negative, goes bearish, and the market comes down heavily, the next day, irrespective of what the Apple is going to post, okay, bad or good earnings, the market will try to move up. Because of Apple, there will be some news. So let's not speculate. In terms of the technicals, okay, now let me clear that somewhere around 5140, okay, this is the boundary of the Ichimoku cloud, and boundary of the Ichimoku cloud always act as support and resistance. This means that as of now, S&P 500, but before 5140 can be seen, there is a very heavy, very strong resistance zone for the S&P 500, and this is my calculated resistance zone. So 5140, okay, it's a distant thing. It will not happen. It will never happen if the S&P 500 fails to sustain, fails to clear, fails to close above my heavy resistance zone. Okay, the only condition 5140 or even 5150 or even beyond 5200 or so, it can come into the picture only and only if, I repeat, only and only if the S&P 500 sustains above the heavy, very heavy resistance zone, okay, my calculated resistance zone. Otherwise there are no chances. But for your understanding, okay, what I can say is that if the S&P 500 fails to give a closing above these, the bunch of moving averages, okay, absolutely no chances, okay, of any kind of bullish movement, okay. Forget about this, the bullish movement, then be ready for the bearish movement, okay. It will come down and it will come down heavily, okay. So this means that a bullish movement can happen not just to 5140 approx, the boundary of the Ichimoku cloud, okay. The bullish movement can happen even beyond, okay. It can move up to like 5200, not a problem. But for that to happen, it must give proper closings, okay, above these, the bunch of moving averages, as simple as that, okay. Or this the very heavy resistance zone, very heavy resistance zone, okay. Above the resistance zone bullish, below the resistance zone bearish, okay. This is clear. Now this is one part, okay. But the most important thing here is in the Dow Jones, because there will be no bullish movement in the S&P 500 or no significant bullish movement in the S&P 500 unless the Dow Jones, because Dow Jones is trading bearish, it is in the absolute in this the bearish trend, okay. So there will not be any significant bullish movement, okay, or any bullish movement in the S&P 500 will be limited, okay. And this will be limited to the bullish movement of the Dow Jones, because now here comes the boundary of the Ichimoku cloud, which is around 38,500 something, okay, boundary of the Ichimoku cloud. This means that S&P 500 can move up, not a problem, it can move up, but it will be able to move up equivalent to the upward movement, bullish movement in the Dow Jones, okay, around here. Because now when the Dow Jones moves here, it has seen a failure here, number one failure, number two failure. This is going to create a very heavy resistance for the Dow Jones, very heavy downward pressure, okay. Only the favorable comments of the Federal Reserve chairman can help the Dow Jones and the entire market or the heavy manipulation, these are the only two conditions can help the Dow Jones to move back into the inside or to give a closing inside the Ichimoku cloud or to move up. Otherwise, no. Any bullish movement in the Dow Jones will be limited to the boundary of the Ichimoku cloud. Okay, and the S&P 500 and the bullish movement in the S&P 500 will be limited to equivalent to where the Dow Jones will be, okay, at that time. So the bullish movement is clear. Okay, if the Dow Jones is able to close inside the Ichimoku cloud, okay, this means that the S&P 500 most likely or highly likely has closed above my strong resistance zone. Okay, most likely. Okay, but whether it will or not, okay, that I will confirm, okay, to my Patreon community members, okay, whenever it happens, whether it has actually happened or not. Because see, in Dow Jones we have Goldman Sachs, United Health and Home Depot, okay, and Microsoft. Whereas in the S&P 500 it is a tech index, just like the Nasdaq and S&P 500 both are tech indices. Okay, Microsoft, Nvidia, okay, and Apple, okay, they are there. Only Microsoft is the common constituent in the top 5. Okay, this means that let's say there comes a heavy bullish movement through Goldman Sachs and UNH, United Health Group, or Home Depot, okay, but not through Microsoft. This means that Dow Jones will be able to move up because of these, but at the same time the S&P 500 will struggle to move up because Microsoft is not moving up, Nvidia is not moving up, Apple is not moving up. Okay, so we need to look into this, but most likely it will happen, but I cannot give a 100% guarantee or certainty that it will be able to cross or to close above my heavy resistance zone. Okay, but if you are my Patreon community member, then definitely, okay, I will mention these the numbers, okay, in the subsequent updates, in the pre-market update, subsequent update, and the final update, so that you can trade accordingly. Okay, now this is clear. Bullish movement, bullish side is clear. Okay, so now let's talk about the bearish side, because the trend is bearish. Okay, trend is bearish. Okay, that is clear. So bearish trend means, again, we will look to this the bearish trend through the Dow Jones. Okay, now here in the Dow Jones, you can see that the Dow Jones has failed one time, two times, and this is a very bad indication, very bad indication. Okay, this clearly means the Dow Jones is bearish, okay, through all of the technical indicators also, and there is heavy bearish pressure on the Dow Jones, and this bearish pressure is growing, it is growing. Okay, this means that either heavy manipulation of highest level, or the Federal Reserve chairman, if he goes supportive to the stock market. These are the only two conditions, okay, through which the Dow Jones can regain its bullish movement, otherwise it will remain bearish. This means that if the Dow Jones try to move up, it can move up to here, fine, it will struggle, it can also breach, it can easily breach the boundary of the Ichimoku cloud. That's not a problem. Problem is the closing. Okay, the problem is the closing, because if the closing remains below the Ichimoku cloud, it will fall, and it will fall heavily. Okay, so these are two things, it will fall, number one. Number two, it will fall heavily. Okay, and whenever the Dow Jones will fall, then doesn't matter what the S&P 500 and Nasdaq are doing, they will also have to give up. Once again, Nasdaq will suffer heavily. Okay, then it will be the S&P 500. S&P 500 will also suffer, okay, heavily. S&P 500 will also suffer kind of heavily, okay, but not as heavy as the Nasdaq. It will be the Dow Jones which will suffer the least. Everything, all of these indices will suffer, okay, but in this particular manner. Okay, and I've shown you last week also that Nasdaq has given up Nasdaq has given up 6.5%, S&P 500 gave 3.5%, and Dow Jones gave up 1.5% only. Okay, yes, so this means that doesn't matter where the S&P 500 is, what the S&P 500 or the Nasdaq are doing, they will also have to come down, and to come down heavily. In that case, there will be very heavy chances that the S&P 500 will be able to breach and will be able to give a closing below this the boundary of the Ichimoku cloud, which is somewhere around 5,000. Okay, it will be able to close below this the boundary of the Ichimoku cloud, 5,000 or 4,900 something is there. Okay, So once it gives just one closing below the Chimoku cloud, absolute bearish, everything is bearish. And also whenever it happens, then you will notice that this change in the MACD, okay, this bullish change in the MACD, again the MACD will give a bearish crossover. Okay, generally MACD doesn't do that. Okay, but we have seen the same in case of this the S&P 500. Then that on the daily chart, okay, here you can see very rough movement, up down, bullish crossover, bearish crossover. Okay, so MACD can do that, okay, on the daily chart. But this kind of movement on the weekly chart, okay, no, that is not there. On the weekly chart I've shown you, it is bearish, clearly bearish. MACD and the Dow Jones and the stochastic RSI, okay, they are bearish. Let's talk about one more technical support. Okay, yes, let me first complete the cycle. So whenever this the Dow Jones it comes down, okay, it is going to find some support here, very strong support here, which is around 37,800. okay, somewhere around 37,800. There's a very heavy resistance, very heavy support level, my calculated support level, okay, and this support level is somewhere around 37,800 or 37,900. okay, this means that whenever it comes down, it is going to find very good support here, okay, and if we calculate, okay, then fall from here around 1.3% or so. 1.3% fall in the Dow Jones means around 1.7%, okay, 1.6 or 1.7%, so that will be around, okay, yep, or roughly it is around 5,000, roughly 5,000, okay, 5,000 in the S&P 500, rough, this is a rough number, rough figure. 37,800, again a rough figure in the Dow Jones. Okay, Dow Jones will try its level best to sustain here, okay, but if it breaches and if it goes below the lowest price of this candle was 37,600, 37,612. If the Dow Jones comes down, breaches the strong support, that will be the first very clear indication. The second clear indication, when the Dow Jones goes below 37,612. okay, this means that now the very heavy support is at the 200-day moving average, 200-day moving average of the Dow Jones, and this will be then from here it will be around 3.8%, 3.8% here. And in case 200-day moving average in the S&P 500 is around 4,740, 50 60 4750 somewhere around that. But let's calculate the fall. 3.7% in the Dow Jones means 4.5% in the S&P 500. 4860, okay, 4860. And there was one more thing, and this was the previous all-time high, and this was 4818, 4818. This means that when the Dow Jones comes down to find very heavy support at this the 200-day moving average, it can even breach the 200-day moving average, not a problem. But once again, we always consider the closing. If it gives a closing above 200-day moving average, then only we will say it is sustaining. Okay, here S&P 500 will come down and will find very good support, very strong support at 4818, because this was the previous all-time high. And to your surprise, S&P 500 has failed to fulfill its obligation again and again, repeatedly. I mentioned in my previous S&P 500 technical analysis, okay, multiple times, that the S&P 500 has failed to fulfill its obligation to 4818. okay, no matter what happens, okay, or wherever, okay, it goes, eventually there will be a fall, heavy fall, and it will come down to fulfill its obligation to 4818, because no stock, no index, no commodity, nothing is allowed to trade in this manner where it doesn't fulfill the obligation to the previous high level. Okay, and now it will be coming down to 4818. okay, and that is also clear. So this means that there is a kind of opportunity. Okay, what kind of opportunity? Opportunity means if it moves up, if it goes bullish, okay, we might think that okay, it is going bullish. But if it remains inside the Chimoku cloud, and at the same time the Federal Reserve Chairman, okay, either he goes neutral or bearish, in that case there will be a heavy fall from here to 4818. And if I calculate from here to 4818, will be around 6.5%. 6.5% fall in the S&P 500, and S&P 500 will be heading for a correction. Correction generally means 20%. Okay. So this will be 6, and 6.5% will not be there within 1 week. Okay, it will take around 1 to 2 weeks. Okay. Will happen between 1 to 2 weeks. 6.5% will happen. So this means that this will be seen as an opportunity. Okay, a bearish opportunity, not a bullish opportunity, a bearish opportunity, because S&P 500 is going to suffer heavily, 6.5%. Nasdaq will suffer by almost 10% or 12%. Okay, so Nasdaq will suffer heavily in the bearish side. Okay, it is there. Dow Jones is there. There is a condition, a technical condition that can help the S&P 500, Dow Jones, and the entire market to sustain. What is that condition? This condition is in the Dow Jones. Okay, now this is the MACD. MACD has gone bullish. It has changed. Okay, it has given a bullish crossover. However, let me remind you that because it is trading below the zero line, what? Below the zero line, and you can notice, okay, this is the zero line. Okay, because it is trading below the zero line, it is negative. This means that the trend is negative. MACD has changed to bullish, not a problem, but it has changed to bullish in the bearish trend. What it means? That the trend will remain same, remain bearish, but it will allow some bullish retrace in the Dow Jones. Okay, now if there comes a heavy bullish candle, one or two, I think two bullish candles, okay, it will take Monday and Tuesday. If there comes two bullish candles in the Dow Jones, I'm not talking about S&P 500, I'm talking about Dow Jones. If there comes two bullish candles in the Dow Jones, then this stochastic RSI, which is trading bearish, it will then change to bullish. When the stochastic RSI goes bullish, MACD is already bullish. This particular combination of bullish and bullish will then give the relief. It will give the relief to the entire US stock market, including the S&P 500. This relief, however, this relief will be there until 2 p.m. Eastern Time, US and Canada, Eastern Time, 2 p.m. On Wednesday. Okay, because at 2 p.m. the decision will be published, FOMC decision will be published, and at 2:30 p.m. the Fed chairman will hold the press conference. Okay, so this bullish movement or bullish support will be there until 2 p.m. or 2:30 p.m. Wednesday Eastern Time. However, there is one more thing. If the Fed chairman, just like, because Fed chairman is recently, we have seen that the Fed chairman is openly supporting the stock market to go bullish. If the Fed chairman supports the Wall Street and the stock market to go bullish, in that case, if this combination is seen bullish, MACD, bullish stochastic RSI, and now the Fed chairman is also supportive, then there will be heavy chances, not heavy chances, but there will be very, very good chances that the trend, the bearish trend, can change to the bullish trend, okay, within 1 week, like 4 or 5 days, or within 7 days or so. Okay, see, whenever it happens, okay, this particular change in the Dow Jones, and also, okay, this is the Federal Reserve chairman, and if you are my Patreon community member, okay, and as you know that I give you the frequent updates, okay, the mood of the Federal Reserve chairman, the mood of the market, and exactly it happens, okay, in that manner. So if you are my Patreon community member, then wait for Tuesday and be available on Tuesday, and I will give you the interpretation, okay, of the release, FOMC release, and then from 2:30 p.m. onwards, okay, I will give you the frequent updates, okay, what he is saying, how he is saying, his body language, and whether you should trade bullish or bearish, okay, and accordingly you can change, just like you always do, to my Patreon community members. And guys, if you have not yet joined my Patreon community, then I've given the link in the description of the video and also in the comment section. You can join my Patreon community in order to get the daily and the precise updates, precise movement of the S&P 500 from Monday through Friday. Okay, so this is the only relief that we can think of. But remember, Wednesday, whatever relief is there or will be there, it will be there only until Wednesday. Now from Wednesday onwards, okay, things will change. And this also means that if the Federal Reserve chairman goes bearish, if he says negative, and then on Thursday, if Apple posts, although Apple is not expected to post good earnings, but if okay, let's not speculate, if Apple posts good earnings, okay, or if the earnings are as per the expectations of the Wall Street, in that case market will get a relief only for Thursday, not for Friday. Okay, it will get a relief only for Thursday, just for one day. Okay, and then eventually, because the trend will then set, trend will be 100% confirmed it is bearish. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon and hit like if you like this video. And if you want to join my Patreon community for the daily precise analysis updates, the precise movement of the S&P 500 from Monday through Friday, then I've given the link in the description of the video and also in the comment section. So guys, this was my S&P 500 weekly technical analysis for the week of April 29th. Means from April 29th, which is Monday, to May 3rd, that will be Friday.